Today I'm chatting about a popular tweet I've gotten many messages about and sharing all of the June 2023 data you need to make an informed decision as buyer, seller, or renter in the Phoenix housing market. Be sure to stay tuned to the end to get my take on our current market compared to the low 6 months ago. Hey y'all, welcome to the Living in Phoenix, Arizona channel. I'm Heidi Littleton. If you're new here, this channel is about all the things living, eating, playing, and working in the Phoenix, Arizona area. If you're not new here, welcome back. Don't forget to hit the subscribe button and the bell so you get notified anytime I upload a new video. Now, before we dive into the June market data, I've gotten several messages asking about the tweet that was going around about an Airbnb collapse. This was tweeted out by the popular real estate influencer, Nick Gurley. The implication in the tweet is that these cities could soon see a lot more homes come on the market, which should lead to lower prices. After all, one of the biggest drivers of record high home prices in recent years is our lack of inventory. Now, I want to point out a few things that we need to be critical of with these types of tweets. First, make sure you're researching the person. If we scroll through his YouTube channel, you can see he's been talking about a crashing market for a long time, like several years actually. His channel is all about the clickbait. Negativity unfortunately gets more clicks. I mean, we see the same thing on the news, right? And as the saying goes, even a broken clock is right at least twice a day. Second, where is the data coming from? His data is from one source, alltherooms.com, and not multiple verified sources nor larger sources. Also, as a friendly reminder, always make sure you're checking local data, not national data. Hopefully, that's why you're watching this video. Of course, the data that he is discussing is behind a paywall, so it makes it difficult to really look at the data without paying. So the average consumer can't really verify on their own, which is a red flag to me. In fact, people have pulled additional data mirroring what Nick pulled, and it isn't lining up. In fact, Jamie Lane, who is the chief economist and head of analytics at AirDNA, which is the other major short-term rental data company, looked at the All the Rooms data and ran a mirror analysis with AirDNA's data. And well, just look, revenue per listing is down, but it's not down by a third or more in most markets. As you can see, Nick is showing a drop of 47.2% in Phoenix versus AirDNA at 3%. That is a significant difference and another red flag. Even Nick has now come out stating he is aware of the discrepancies in the data. So keep in mind, people can find and tweak any data to fit their narrative. So just be critical of where the data is coming from, how it's calculated, and the narrative that it is trying to fit. So what am I seeing anecdotally here in Phoenix? Number one, before these owners try to sell, they are moving to long-term rentals. It is hard to pinpoint this specifically in our rental data as we don't have a box to check in the MLS that says used to be a vacation rental. And not every agent is good about checking the fully furnished box, but some cities like Scottsdale and Glendale did see a surge in new long-term rental listings after the Super Bowl. The thing to keep in mind is that 82% of current homeowners have an interest rate less than 5%. So most people are going to want to hold on to that rate and the appreciation gains we've seen over the past few years. Number two, again, anecdotally, the few Airbnbs I have seen be listed are tending to be pricing them too high. There are two for sale in my area that have been sitting for quite a while because, quite frankly, they're being unreasonable. One canceled and decided to stay in Airbnb, and the other did a huge price drop in line with the market. So those that do want to sell will, and those that don't will either go back to being a short-term rental or likely convert to long-term rental. Overall, make sure you follow multiple sources for data, focus on local data, and always review news articles and tweets with a critical eye. All right, now that we have that cleared up, let's take a look at the market data for June 2023. Rates are still not where we would like to see them. I was scared to check my app for the past couple weeks I didn't know what I was going to see. But yesterday, with the release of the June CPI, we saw rates finally come back below 7%. This feels like we are finally taking a step in the right direction. So let's hope we continue with this positive trend in the coming months. Also, for those that want to nerd out like me, I love Mortgage News Daily and the Black Knight's Mortgage Monitor report to stay up to date on all things rates and mortgages. And I'll link both of those in the description for you. Now, let's take a look at the Cromford Market Index. As a refresher, the Cromford Market Index provides a short-term forecast for the balance of the market. It looks at trends in pending, active, and sold listings compared with historical data over the previous 4 years. Values below 100 indicate a buyer's market, while values above 100 indicate a seller's market. A value of 100 exactly indicates a balanced market. The big takeaway here right now is stability. Since June 8th, the overall Cromford Market Index has only risen 2.1. Representing a level of stability we have not seen for some time. 16 of the cities are currently seller's market, while one, Buckeye, remains balanced. Among the secondary cities, Casa Grande has the lowest CMI at 90, but this has moved up over the last month, meaning we have no buyer's markets left in the greater Phoenix area. Chandler has broken above the 300 mark and is now a very difficult environment for buyers. Demand dropped sharply between June and July, and the third quarter is never the strongest part of the year, so there is no reason to expect much from the next 3 months. Some people drastically overstate the importance of interest rates in determining home prices. Interest rates are important, but when they move higher, they lower supply as well as demand. It is the balance between the supply and demand that determines how prices move. At the moment, supply is much weaker than demand, so prices are increasing, as they have since January, actually. In fact, supply of new listings is down more than 40% compared to this time last year. Lower pricing looks unlikely while supply remains tight. And the people predicting a new foreclosure wave are going to have some explaining to do. Pending foreclosures have been in decline for almost 3 months now and gone back down to the level that we saw this time last year. So no foreclosure wave coming this way. Now let's look at year-over-year data. Comparisons with this time last year are getting easier. As a year ago, the market was deteriorating as demand from institutional investors and IO buyers completely collapsed. A steep rise in interest rates had spooked the market, and ordinary buyers were holding their breath too. Buyers are currently unimpressed with the low inventory of resale homes and are increasingly turning to new build homes. Developers are enjoying strong orders, firmer prices, and healthy margins. The mood in the new construction market is positive. Closings were much stronger in the new market, up more than 8% from last year. Pricing was also higher for new builds than a year ago, with the median staying above $500,000 since May 2022. But yes, there's always a but. They have relatively low inventory of homes for sale and a weak pipeline of new permits to build. So here's my 2 cents. If you're even thinking about new construction, now is the time to jump in. Many are offering design credits, closing costs, and rate buydowns. In addition, with the limited number of permits projected for the coming months, new construction is likely to get competitive and fast. So take advantage while you can. Real quick, if you're finding this video helpful, go ahead and hit that like button. It lets the powers that be know to share it with others who are looking for similar info. All right, so let's get into the nitty-gritty, shall we? Active listings were down to 11,545, which is 20% down from last year and down 1.6% from the last month. A balanced month of supply is 4 to 6 months, and we are at 1.6. So this will give you an indication of how low our inventory is. Monthly sales were down 9.1% and down 9% from last month. This is showing a slow in demand given the high interest rates and affordability. Personally, I don't use averages. I prefer to use medians as they are much less susceptible to extremes, which Phoenix can have with $100,000 manufactured homes and multi-million-dollar luxury homes. With that, the monthly median sales price was $443,000, which is down 6.6% from last year, but up 2.1% from last month. As you can see from this graph, from February to June, we are actually up 7.3%, with every month having been ticking up slowly but surely. If this trend continues, we're very likely to see a year-over-year appreciation break even in August. Now let's chat about seller concessions and over asking sales. We are seeing an uptick of closings over asking, particularly in the price points like under $400,000. Again, this is due to our low supply. When a good one comes up, people are in the market, are going to snag these quickly. Sales involving seller paid closing costs have been steadily declining as well, down 51% from January to 42% in June, with the amount coming down from to $8,000 from $9,700. So sellers, keep this in mind as you are reviewing your net sheets and setting expectations. Now, renting for some is looking really good right now with those higher interest rates. The good news, rental rates have remained flat when looking at year over year. In August 2021, we were about 2,200, and in June, we're about 2,200. We've also seen an uptick in long-term rentals, so this is giving renters more choices and some negotiating power. Now, I want to leave you with an overview of the 6-month change since our low in December. Many look at year over year and still see negativity, but I want to show a different perspective. How quickly the Phoenix market has begun to rebound. Our median sales price is up $30,000. Sales over asking have increased 21%. Concessions to buyer have decreased 8%, and the amount has decreased $1,400. The sales to list price ratio has increased to over 98%, and the median days on market have drastically dropped by over a month. We are now trending similar to the 2018 market and not the unicorn years of 2021, 2022. Whew, that was your June 2023 market update. If you have any questions about a particular city or market stat, don't hesitate to reach out. All of my contact info is below, and I'm happy to share all of my insights. Don't forget to hit the like and subscribe button to see future Phoenix market updates. Until next time, happy house hunting.